It has been a while since the last time I talked about Qualcomm. Last time I did an analysis, it already looked quite interesting, and I was wondering if I sold too quickly my whole Qualcomm position. So for today, let's see where the stock is standing and how things are looking for the near and long-term future. Obviously, Qualcomm stock has seen a pretty decent run with 20% growth. But the stock has come down quite a lot ever since their peak in June. And one of the reasons why people fell in love with Qualcomm is the fact that this tech company pays a juicy dividend. The current dividend yield is at 2%, and they have increased their dividends for 20 years in a row. Pretty impressive if you ask me. So for me, today's question is Qualcomm stock undervalued as of right now? And later in the video I will come up with the 3 price targets, and these might surprise you big time. Looking at the recent earnings, we see that both the EPS and revenue estimates were beaten by Qualcomm. And for the upcoming earnings, analysts expect another beat. Revenue was reported at 9.4 billion, up 11% year over year. Earnings before tax was reported at 3 billion, up 25% year over year. And EPS reported at $2.33 was up 25% year over year. Diving into these segments, we see that QCT, by far the biggest segment, reported a revenue of 8.1 billion, up 12% year over year. To me, this looks really good, especially since the earnings before taxes is up 25%. QTL, the second segment, sees a much lower growth rate, with revenue at only 3% year over year, and earnings before taxes at only 10%. Diving again a bit more into detail, we see that these subsegments within QCT. Handsets is up 12%, which is a decent number. Automotive, however, shows a much higher growth number at 87%. And Internet of Things is sitting at a minus 8%, so that's definitely something to keep your eye on. Looking at the Q4 guidance, it is expected that revenue will be in the range of 9.5 to 10.3 billion, which is a great number. EPS is also expected to increase quarter over quarter, within a range of $2.45 to $2.65. Expenses will be again at 2.2 billion. So technically margins are expected to increase from here, which is also reflected in the earnings before taxes margins. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Qualcomm stock is a 192 billion market cap company. PE ratio is at 22, indicating they are trading around their fair valuation. Later in this video, I will show you my 3 price targets for Qualcomm stock, so make sure to watch until the end. Revenue is at 37.4 billion, and in this graph we see that revenue went up in the long run. Not always at a steady and consistent pace. Last year the revenue went down, and right now it is finally increasing again. Looking at the margins, we see a lot of interesting things happening. Gross margin and operating margin are coming down in the past decades. Looking at the net margin, we see that this is kinda steady, and after a decrease in 2023, margins are increasing again most recently. EPS is looking pretty good in the long run, and it is going up. The only thing is that I do prefer a bit more steady in pattern here as well. Analysis expect that EPS will increase a decent amount in the coming years. They expect big numbers for 2024, up until 2026. Somehow, in 2027, it is expected to see a decrease, and only to see a big increase again in 2028. Down the line, it looks pretty good to me. For the revenue analysis, expect around 8 to 9% growth in the coming years, which looks pretty good to me, especially a few quarters of decreasing revenue. Return on assets is sitting at nearly 17%, which is a great number. Return on equity looks really good, but the most important number, return on invested capital, is sitting at 14%, which is a great number. However, it is lower versus the 5-year average, which is not a good thing. Current ratio is at 2.39, which is a high number. The fact that it is increasing over the years is also something that I don't like. Right now, Qualcomm has 14.5 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Qualcomm has 13 billion in total cash, so they can't pay down almost all of their debt. This is something that I really like. But it is still very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run. However, it is again not really steady and consistent. Shares outstanding are decreasing in the long run, which is something that I really like. Most recently, they issued a few more shares. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the P/E ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2%, which is a great number. Annual payout is at $3.4, and payout ratio is around 34%. I prefer 50% or lower, so right now they have 66% left in cash to buy back shares, pay down debt, do acquisitions, and all other things. The 5-year growth rate is at a shy 6%, which is a little bit of a low number, also considering their yield and payout ratio. They increased the dividends for 20 years in a row, which is really impressive. If you take a look at these numbers, the dividends paid since 2014, you see that Qualcomm did increase the dividends at a decent pace. Back in 2014, Qualcomm paid a $1.61 dividend. This year, we're sitting at $3.4. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is coming down over the years, which is something that I really like. In this graph, we see the expected dividends in 2024, 2025, and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall, these dividends look really good to me. But how about the historical returns? I decided to compare Qualcomm stock with the overall market. In this case, the S&P 500. Next to that, I added Texas Instruments and Intel. On the 5-year chart, we see that Qualcomm massively outperformed the S&P 500 with 150% for Qualcomm and 108% return for the S&P 500. Both Texas Instruments and Intel had much lower returns. On the 1-year chart, things look pretty interesting, with Qualcomm sitting at 55% return, again outperforming the others in this list. However, this time Texas Instruments was really close in beating the S&P 500. On the 6-month chart, it is again getting even more interesting, with Qualcomm underperforming both the S&P 500 and Texas Instruments. Intel is looking horrible. On the 1-month chart, it is Intel that is the big winner here, with a 16% gain, while the others are seeing much lower returns. Bottom line, Qualcomm beats the S&P 500 in the long run, and in the short run they are lagging behind a little bit. So could this be the perfect time to buy Qualcomm stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid, and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 4, 6, and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 21, 23, and 25%. For the free cash flow margin, I'm putting in the same numbers. For the PE ratio and the price to free cash flow, I'm putting in pretty high numbers for a slow growing company. We're filling in 20, 22, and 24. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Qualcomm stock is around $169. I hit analyze, and we see a lot of red numbers. We have a low price target of $106. We have a mid price target of $143, and we have a high price target of $192. To me, the mid to high price target is the most justified here, meaning the stock could be undervalued because of this high range. But to me, it feels like it is hovering in the middle, and I'm leaning a bit more to the mid price target here. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Qualcomm is that I like the business. I used to own Qualcomm and I bought shares around $100 if I'm not mistaken. I sold around $150, again if I'm not mistaken. Did I sell too quickly? Well, looking at the current stock price, yes, maybe. Based on the numbers back then, the information we had, and on the things that happened in the past couple of months, well, with all these things in mind, I don't think I sold too quickly. These things happened, and this is also pointing out that sometimes things go the other way than you expect them to go. Looking at the current fundamentals, I think the company is looking pretty good. For me, it's important that revenue and margins keep on increasing from here. If not, the company might be in big trouble. A thing that I love about this company is the fact that they pay down almost all of the debt with the current cash, if they want. Dividends are also looking really interesting, but I would love to see a higher growth rate here, especially when there's some room for growth. Last but not least, the valuation is showing that the stock could be undervalued right now, but I'm skipping this stock and keep it on my watch list. Meanwhile, I analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.